Politics does not matter to the stock market whatsoever. We're going to talk about exactly why and go over the numbers behind that towards the end of this video. What's up, apes? Welcome back to the 𝗙𝗚𝗚𝗛 Daily Podcast of the Day. Thank you all for joining us here once again on the world's most influential and important podcast. It's a big day here today. It is currently Tuesday, November 5th, 2024, unfortunately. It is now 6:42 p.m. We got a big day going on over here. It's election day in the United States, and that means that it is officially the election special here at the 𝗙𝗚𝗚𝗛 Global Headquarters. Stick with us, guys, because we're going to break down exactly the investment strategies that you want to put in place for your portfolio so that you can maximize profits off of this election. Just kidding. Jesus Christ. That's what I would say if I was a scumbag scam artist trying to get you to watch through this video. And luckily, I'm only a scumbag and not the scam artist part of it. So, we'll go ahead. We'll break down kind of the important things related to the election and how it's going to impact markets. But, we're going to try to talk about it kind of as least as possible, despite my attire for the day. Guys, the election, obviously, it's important, but in terms of your portfolio allocation, it really shouldn't make a determination whatsoever. I promise you, politics does not matter to the stock market whatsoever. We're going to talk about exactly why and go over the numbers behind that towards the end of this video, so make sure to stick around. But before we get into all of that, let's go ahead and talk about some of the high-level market action of the day. So, it was election day here. And stocks absolutely loved it. I mean, it was also, we're kind of in the peak of earnings season as well, so that helped out as well. But every single index was up more than 1% on the session, and we saw basically green prints. If you look at any one of the heat maps, for the American indexes, you'll see that it was basically pure green on the day here today. So the S&P 500 was up 123 basis points, or 1.23%. The NASDAQ was up 143 basis points, whereas the Russell 2000 was up, actually leading at 188 basis points. The WSO Alpha portfolio was up 140 basis points, and not that anybody cares, but the Dow was up 1.02%, or 102 basis points. Basically, everything linked to home building was up for the day, so we got some big support from Builders First Source as well as Zillow. Tesla was up big, and Phase Energy, so some of our more recent purchases were up big in there as well. Make sure to go ahead and subscribe to WSO Alpha, or you can just keep watching these videos, because I'm going to eventually leak the entire portfolio if I keep going at this rate. But overall, we are up 14.3% year-to-date so far, which is a number that makes me wish I was dead, but still I also don't feel as bad about, because it's an election year and it's been a pretty crazy past 12 months or so, or past 11 months or so, I guess, at this point. All right, let's go ahead and move into some of these banana bits. So I'm actually going to start off with not banana bits, because I want to check the election odds. Once again, everybody, it is 6:44 p.m. Eastern Standard Time right now. Let me go ahead and check the WSJ's poll tracker. 0 electoral votes have been cast just yet. According to their tracker, it looks like Indiana and Kentucky are almost ready to declare as a Republican victory, aka a Trump victory. That's what it looks like as of right now, and that's just in those states, which is, what is that, a combined total of 6 electoral college votes? That's not going to matter at all. As goes Pennsylvania, so goes the nation this year. But let's go ahead and go over to Kalshi. So if we look at Kalshi, once again, guys, 6:45 p.m. right now, we have Donald Trump heavily favored to win the presidency at 57%, according to the betting markets on Kalshi. Kamala Harris at 43%. Over on Polymarket, it's a little bit closer, so the international bettors are, pricing in a bit of a closer election. We have Trump at 55% and Harris at 45%. But let's go ahead and check the really actual important aspect of things, because like I said, guys, as goes Pennsylvania, so goes the nation. That is my prediction for this election, and that is my only prediction. And according to Kalshi's betting market for who will win Pennsylvania in the presidential election, Donald Trump is at 54% and Kamala Harris is at 46%. And looks like that, in addition to Nevada, to all the Nevadans out there, that looks like it's going to be the closest state as of right now. Both have, Trump has 43% odds of winning the popular vote and Harris at 41%. So maybe we just fucking won't have a president. I mean, can we just have an AI president at this point? Jensen Huang, NVIDIA, can be in charge. That is a wonderful segue, because our first banana bit of the day actually is just about those two, NVIDIA and Jensen Huang. Congratulations, because NVIDIA is now officially the largest company in the entire world. Now, it briefly surpassed Apple to become the largest company in the world on Monday, but it actually closed above Apple's market cap yesterday. Let me go ahead and give you guys the details on exactly what the market cap there is. So, NVIDIA is at 3.431 trillion, whereas Apple is at 3.377 trillion. Microsoft pretty far back at 3.059 trillion. Then we get Amazon Alphabet, Saudi Aramco, Meta Platforms, TSMC, Berkshire Hathaway, and Broadcom at 812 billion, and then Tesla at number 11. So congratulations to Jensen Huang and the team at NVIDIA for the greatest run in the history of capitalism, from complete obscurity just a couple of years ago, where only fucking nerd tech losers knew what this company was, to now being literally the largest company in the world, minting millionaires in probably every continent, including Antarctica. And, you know, now arguably the biggest risk to your company is that your employees are going to leave because they're too rich because your stock price went up too much. Good job. If I was Jensen Huang, I would fucking retire and get the hell out of there. But hey, leave it to him. I mean, he was out there signing bras at his last fucking earnings call, so can't exactly blame him for wanting to stick around a little bit longer. Okay, and then we included a link in here for the Wall Street Journal's electoral vote tracker. That's one of the ones that I'm watching here tonight. But I'm also going to be following the all-in election kind of broadcast. It seems like the most kind of, I mean, I don't think there's any fair and balanced news in the United States, besides the Daily Peel, of course. But that is probably the closest we can get. So if you're on that live stream, you'll see me there. Google searches. Oh, this was absolutely hysterical. So, you know, of course, being the Daily Peel Global Headquarters, we get into some of this, more ancillary research. I don't know if ancillary research is the right word for it, but kind of, non-traditional research outlets to get that perspective advantage. There's no real information arbitrage, but there can be a perspective arbitrage on what you do with the information that you're given and what you think that's going to be going forward. So one of the things that I wanted to see today was how actually involved is the average American in the presidential election. I mean, if you're on Twitter, if you go outside, it's pretty much everything that you see, but we know Americans, they don't really like to touch grass these days. So basically all I did was go to the Google search trends thing, and I typed in who is running for president, and we are at an all-time high. Today, November 5th, Tuesday, November 5th, at about 11:45 a.m. this morning specifically, Americans hit an all-time high in their searches for who is running for president on election day. Can you fucking imagine? Living under a rock, and honestly, I'm extremely jealous of it. That's probably a much better mental state for long-term, for human flourishing, for eudaimonia, as Aristotle would put it. I think it was Aristotle or one of those guys, but either way, my brother will be able to tell me. Okay, moving on down below. Casual reminder, back in the day when he was working at Jane Street before he was officially scumbag fraud, Sam Bankman-Fried was out there trying to build election trading models. And, he built one around the presidency of Donald Trump. Basically, they predicted that Trump was going to win, so they got that aspect right. But they thought that markets would sell off in the immediate aftermath after he won. Ended up losing $300 million because of that. So shout out to Sam Bankman-Fried, being a scumbag before it was even cool to do so. All right, and finally, super micro shares were down about 17% after hours last I looked, because the company came out and announced weak guidance and said that they are not going to be publishing. It's been a full quarter now since they've been delaying their annual report, and they are not going to be publishing it anytime soon. So the stock was up 6.42% during normal hours trading on the day. Let me go ahead and double check what it is after hours now. Yep, down 14.175% in the after hours session. Okay, that does it for our banana bits. Let's go ahead and move into the macro monkey today. So obviously, it's election day. We got the election on the mind, America on the mind. And so we were talking about how to save America. All right, some pretty easy steps right here. But the first question is, we got to ask ourselves, what is our real civic duty? What is your real civic duty to the United States? Part of it is going to the polling center and voting once every 4 years for your next overlord or whatever. But you have the opportunity every morning to wake up and elect to create shareholder value, to get out there and contribute to the economy. This is a choice that we all face on a daily basis. Nothing like stimulant abuse and an addiction to climbing social status can get us out of bed like that. That is true patriotism, if you ask me. So what's really more important, going to vote or contributing to the economy? I think we all know what that answer is here. You guys are some very wise apes. But in October, there wasn't much economic contribution going specifically from the manufacturing sector. So what did we get yesterday? Well, yesterday, the Institute for Supply Management, ISM, released its October report on the services sector. So this is the Purchasing Managers Index. The PMI for the services side was released, well, actually 2 days ago by the time you're watching this. It was released on yesterday, because I write yesterday in this. So it was released on Tuesday. On Friday, the manufacturing PMI was released. So we'll break down exactly what happened with both of those here today, what their economic contribution was, and seeing if they're actually living up to their civic duty as they should, as the sectors that encompass the entirety of the economy. So To give some perspective or some context before we go in the third quarter, services made up about 66.1% of total GDP. Now, when I say that, I mean the percentage that's going to be purchased by specifically consumers and businesses. So we're not necessarily talking about government spending and all that other nonsense. So 66.1% of US GDP was driven by services in the third quarter. So of course, that's about 2/3 of the overall GDP. So we're going to focus on that one here first because the services sector was doing pretty well. Manufacturing sector did about as well as Joe Biden would on an IQ test. So you know how that's going to work out. So we'll break that down in a quick second. But first of all, let's go ahead and start out with the kind of good news. So October 2024, this was the 21st month in a row of a continually expanding services sector, last falling below 50 in January of 2023. So keep in mind, when we're talking about the PMI, it's going to give you a reading somewhere between 0 and 100. If you're at 0 or 100, holy shit, something must be popping off. But it's pretty much always going to be between 40 and 60. 50 is the line of expansion or contraction. If you're above 50, this sector is expanding. If you're below 50, the sector is contracting. Now, if you're below 42.5, that's a good signal that the entire economy is either in or about to be in a technical recession. So, U.S. Services PMI, once again, it was the 21st month in a row of being above 50, aka an expansionary territory. Headline Services Index registered a 55 reading in October. That's a decline from 55.2 that we saw in September, so 0.2% decrease, well above the 53.7 that economists pulled out of their ass for this month. So overall, relatively good performance from the services sector at the headline level. But once we break it down into the sub-indexes or the subcomponents a little bit more, 9 out of the 10 services subcomponents remained in expansionary territory, but 8 of them were moving in the wrong direction, meaning that they were moving lower. So they're above 50, but they're less above 50 than they were in September. So let's talk about exactly what those were. Well, like I said, guys, total PMI is going to be at about 55.2. Now, business activity, arguably the most important aspect of the services PMI, of the services sector in this reading, is at 57.2. That's well above that 50 reading. New orders at 57.4, but both of those declined for the month. So business activity was down 2.7, whereas new orders was down 2 index points. So a little bit concerning on the demand side from there. We look and we see employment was up 4.9, whereas supplier delivery was up 4.3, meaning that people are still getting the goods that they're ordering, but they're ordering a lot less, at least in October. So we saw a decline of 0.9 in inventories. That makes sense given supplier deliveries. Prices were down 1.3 at the same time. So that, in addition to new export orders falling 5 whole points, is kind of a concern when it comes to the demand side of things. At the same time, imports for services were down 2.5 points. So overall, the decline in business activity, new orders, prices, new export orders, as well as imports, all signal weakening demand within the services sector. But once again, strong employment, strong supplier deliveries, and a strong headline index show that it's kind of holding up decently well right now. So overall, still holding up well, but moving in a worse direction. This goes back to our question that we're asking with just about every economic report these days. Is this a normalization or a worsening process? Are we heading for a recession, or is this just getting us back to pre-pandemic trends? That is the trillion-dollar question in global macro markets right now. But hey, speaking of weakening demand, let's go ahead and talk to the expert, meaning the manufacturing sector. Basically just had the services sector shoes on backwards. It was bizarro world because the manufacturing sector remains in contractionary territory, but the subcomponents were doing a lot better. They weren't doing good, but they were doing certainly better than the services side of things. So last month, total manufacturing PMI declined from 47.2 to 46.5. This is a fresh low that we haven't seen since July of 2023 to 15-month low. 8 out of the 10 sub-indexes remain in contractionary territory. However, only 5 of them actually declined for the month. So 5 of those declined over the monthly period. We saw 4 out of the 10 subcomponents increase, and 1 remained completely flat for the quarter. So imports were flat at 48.3. We saw the biggest gain in the prices index, obviously, just fuck over consumers even more so. That was up 6.5 points. That was the biggest change on a monthly basis out of any of these subcomponents, up 6.5 points, suggesting potentially an increase in demand, especially when we look at new orders, which are at 47.1, but up 1 point for the month. So, you know, overall, it could be a sign of a return to growing demand within the manufacturing sector, so goods kind of coming back online a little bit. But again, you know, looking at trying to make that determination over a 1-month reading is basically impossible. It's somewhat irresponsible to do that, so we won't kind of come to that conclusion here today. Our big takeaway, despite how the vibes feel in the United States right now, how the election is doing. Uncle Sam is cooking right along. He is doing all right. If we go ahead and weigh these together, where we take the services PMI at a weighting of about 66.1% as it was in the Q3 GDP report, and then we take the manufacturing PMI and we do that at, whatever the fucking math would be on that front, we can see that the total kind of aggregated weighted Purchasing Managers Index of the entire economy was at about 51.12. Now, that measure is probably completely meaningless. I don't think it actually, I don't know if there's some kind of statistical error in there or what, but nobody ever talks about this reading. So if it did matter at all, I feel like people would talk about it, but we like to fuck around here at the Daily Peel. I might ask ChatGPT if it actually means anything here, and I'll report back to you guys if he tells me anything else. Once again, so this is how we're going to save America, guys, because that's the title of the segment here today. Go out and contribute to the economy. On your way home from the voting booth, go buy a refrigerator, go order a new 777 MAX from Boeing. Just do something to get the economic spurs going again, and preferably on the manufacturing side of things. Go ahead and sign up for an OnlyFans account. I don't care what you guys are doing. Just contribute to the economy in some way. Make our GDP grow, and we're going to go ahead and save America. Fuck saving democracy, save the economy. That's what it's all about, right? All right, let's go ahead and move into our big stock movers of the day. I'm going to warn you guys ahead of time. We got 5 stocks today. Yes, an election day special, I know. I guess dreams really do come true. So, Palantir shares were up 23.38% as the most techno-war stock in the market in the most techno-war country in the world. Absolutely ripped on election day within that country. Nothing gets more poetic than that. I mean, regardless of who wins the election, the Department of Defense's budget is going to be the big winner, and Palantir is absolutely not mad about that whatsoever. In fact, it was winning contracts from the Department of Defense that allowed Palantir to completely destroy earnings estimates like it did in the last quarter. So revenue grew 30% annually to $726 million, a lot of that coming from Project Maven, which is kind of the DoD's main, or what's the word they use for that? Not primary, not main, but like it's flagship, maybe? Flagship might be the word that I'm looking for, but it's like its flagship artificial intelligence development program right now. Palantir got their contract increased in that project in the last quarter. Earnings per share came in at 10 cents, beat estimates for 9 cents a share. Only a very slight beat there, whereas revenue of $726 million beat estimates for $705 million. So company did much better on the revenue side, but maybe, a little bit worse on the earnings side than was necessarily going to be expected. But overall, it was still a good quarter. It lived up to expectations. I mean, the stock traded at roughly a 100x PE ratio for the next 12 months coming into this report. Now, next 12 months PE is roughly at about 118x. So the fact that it was able to, rise from 100x based on good results, but probably not that good, like 100 times earnings results, is, I guess, pretty impressive. It shows that risk-on nature of their investors. Moving on down below, we have Reddit. Shares were up 12.58% on the session. Pretty huge flex to be the 6th most Googled term in the entire world. That might have been in the United States who was running for president yesterday, but still, Reddit, throughout 2024 so far, the word Reddit has been the 6th most Googled term in the entire world. Now, looks like artificial intelligence has been a bit of a double whammy for this company. So not only are they able to license out the content on their sites, companies like Google, which they're doing right now, so that Google can use their use all of that text and content that's on Reddit to train their artificial intelligence models. But Reddit actually is getting an uptick in popularity and search traffic, because what a lot of people are doing are saying like, hey, walk me through DCF on Reddit. And so you Google that and it'll give you those results on Reddit, because turns out that human beings actually want answers from fellow human beings and don't necessarily want to prioritize AI slop that you see a lot of the time when you're going to be Googling shit like that. So overall, the company reported earnings on Tuesday, destroyed expectations, had a profit of 16 cents per share, which was a huge surprise to analysts who were looking for a loss of 7 cents per share. Revenue completely humiliated analyst estimates. It was up 68% year over year on a 47% increase in daily active unique users. Great job, Reddit. All right. Now, the exact opposite of great jobs, we have Marqeta. Now, really, this wasn't necessarily Marqeta's fault, but they did absolutely get boned. So this is a card management company. So apparently they like help companies issue credit and debit cards, or maybe gift cards and shit like that too. Overall, it's a payment card management firm. So take that as you will right there. But this company, the stock is down already coming into today. The stock has been down about 80% since its IPO. It fell 42.5% on the session here today. So completely terrible, completely like just fucking delist yourself at this point, because now your all-time return is now 89. It's down 89.14%, a loss of nearly 90% if you bought this thing at its IPO. So the company, they came out, earnings were pretty mediocre. Now, they missed revenue estimates by $100,000, very small miss if you ask me. They barely managed to beat on earnings per share. Payment processing volume grew 30% year over year, and revenue grew 18%. Very weak guidance, kind of threw the baby out with the bathwater on this one because, you know, like I said, they beat on EPS, they barely missed on revenue, and fundamental performance is pretty good. 30% growth in payment processing volume, and again, 18% revenue growth. Definitely nothing to sneeze at, but the market absolutely hated it, mostly because the company cut its revenue guidance for Q4. So Q4 revenue guidance was supposed to be around 17 to 18%, now 10 to 12%. And obviously that means the company is worth half of what it was the day before. Moving on down below, we have, I can't believe this stock is down. I bought so many of their products during the third quarter, but hey, I mean, I guess it takes more than just one to be able to move the needle on this guy. But Ferrari was down 7.36% despite all of the Ferraris. I was trying to think of a model of a Ferrari, but I really can't think of one. Besides the ones that I bought, obviously. All the ones sitting out in my driveway, I guess, couldn't contribute to the stock price going up after earnings. So, turns out it's a little bit harder to cheat on earnings day than it is to cheat in F1 races by simply building the fastest car. F1, dumbest sport I have ever seen in my entire life. Tell me how it's any different than NASCAR. It is the exact same fucking thing, and if anything, worse, because the dudes that drive in it are the biggest douchebags in the entire world. And NASCAR is people like Danica Patrick and Dale Earnhardt Jr. who are just fucking electric and would probably love this shirt if they saw it out in public. All right, back to the story. Ferrari, whose ticker symbol is race, by the way, which is pretty fucking sick if you ask me. The stock was down 7.36% because they did miss on both sales and earnings. Now, they did deliver 6.5% year-over-year revenue growth and a 10.3% increase in their earnings before interest and taxes, aka their EBIT, aka their operating profit. So, wasn't terrible from a high-level perspective, but if we look at volume, that's where the worry kind of comes to fruition. So, pricing completely drove revenue growth. Volume overall was down 2%, led by an absolute collapse from Chinese consumers of 29%. Sponsorship revenue was actually kind of carrying the boat for the quarter. Sponsorship sales were up about 21%, but again, that's a much smaller percentage of revenue compared to their cars. So a 2% decline in volume led by a 29% collapse in China really kind of caused investors to question the luxury market going forward. Now, Ferraris are borderline Veblen goods, and Veblen goods are these things that their price actually increase, or their demand increases along with the price. So basically just makes more rich people want them when the price increases. It was kind of like that, I don't know if you guys ever saw that app that was called like I Am Rich or something, but it was an app that didn't do anything. You just had it on your phone, and at first it cost $100 on the App Store. Nobody bought it at all, but they raised the price to $1,000, and people started going crazy for it. And they made a shit ton of money. I think they made millions, maybe billions of dollars just by doing that. That's an example of a Veblen good. Ferrari sometimes can be like that. More like Range Rovers are going to be like that. And like the super, super high-end luxury market is going to be like that, like a Bugatti or some shit. You know, like just think of the cars that I typically drive. Those are like Veblen goods. But overall, rough quarter for Ferrari. And then special election day edition, we have a fifth stock to talk about here today. I don't know if it's going to get included in the written edition, but the big thing is, I wrote about this stock by about mid-afternoon here today. So around 2 p.m., this stock was up 15.7%, but it finished the day down at 1.16%. And I am, of course, talking about Trump Media and Technology Group Corporation. So, once again, the stock was having a great day. It woke up this morning, was fucking off to the races, fired up for election day to go cast in its ballot, but it finished the day down 1.16%. Heavy volatility. So, you know, there's nothing fundamental here going on whatsoever. The reason that I bully Truth Social so much is not because of out of any political persuasion or anything like that. It's because this thing is a fake fucking company. It doesn't have revenue. It doesn't have earnings. I don't even think it has employees. Does it have products? Like, I know they say that they have Truth Social, but if nobody's fucking using it, can you really say that you have a product? Like, if a developer builds an app in the woods, but nobody's there to hear it, did he really build an app? Like, that's kind of my question with Trump Media Group, at least at this point. So my big concern right now is just the fact that how was I supposed to go to the ballot box yesterday and vote when at no point when either one of these candidates asked to walk the American people through a discounted cash flow? Like, if I don't know that my president can walk me through a DCF, how can I confidently vote for him? Now, the only thing is, Trump, with his background in real estate, he probably could at least tell you how to determine a property's cap rate. So, maybe that's the differentiating factor for you, but I want to hear somebody walk me through in DCF. The really interesting aspect with Trump media and technology stock is going to be what happens after the election. I'm really excited to see what happens once we start to kind of get an idea of who the more likely winner of the election is going to be. Is it good if Trump wins and he's president and has to completely disassociate himself from the company, but maybe it's good for the brand? Is it good if he loses and he can be operational and kind of be like acting as a, maybe not a CEO, but kind of a figurehead of the company? Like, are those good things? I mean, he basically started the entire Obama birth certificate thing, so clearly the guy could push a message. I don't think anybody is questioning Trump as kind of a hype man at all. So, is it a bad thing if he wins? Is it a bad thing if he loses because he'll be able to sell shares? That's going to be the interesting aspect of this, but overall, stock finished the day down 1.16%. All right, we're going to go ahead and finish this up real quick because this feels like fucking dad like waving his finger at the kids or something. Like when I'm rereading this, what I wrote here, I might just fucking delete it and write about something new tonight. But either way, we want to talk about how the stock market doesn't give a flying damn about who you're voting for in the election. So we don't talk about politics here, but I'm going to go ahead and reveal my political affiliations here for you guys on camera. So I'm a registered investor, and I'm part of the extreme wing of the S&P 500 party. So that is the way that I look at things. The only election we care about here at the Daily Peel Global headquarters is which stocks you're electing or you're voting to put into your portfolio. We care about voting with our dollars, not with our ballots. And as a reminder, the S&P 500 doesn't give a fuck about the color of the tie on the person sitting in the Oval Office. It does not care whatsoever, and we have the numbers to kind of back that up right now. Sorry, I was trying to fix a typo that was on here too, because I saw the word nor, and I was like, that's not a word, it must mean not. But then I read the sentence and I realized that I do mean nor. Let's go ahead and get right back to it. So shout out to the team over at 𝗏𝗏𝗏𝗏 Wealth Management. They put together some great graphics on this stuff, and they're great for kind of adding a little sense of sobriety into the stock market that's very much needed all the time. So the first chart I want to show here is $1 invested in the S&P 500 back in 1901 would currently be worth, any guesses? $91,212 as of today. And if you go ahead and take a look at this chart, you can see it's red, it's blue, it might be purple from how red and blue it is, because under both major political parties in the United States, the stock market continues to go up. Now, the market is going to go up provided that earnings and or earnings multiples are increasing. Those are the two things that markets care about, and companies do a really, really, really good job of making sure that they're constantly increasing earnings so that their share price can continue to go up. And it doesn't really have anything to do at all with the fucking president. Now, obviously there's arguments to be made that, if the president comes in, there's going to be like an arbitrage opportunity, or I can put on a trade overnight or something like that. Are you a fucking hedge fund manager? No, you're trying to set up a retirement account so that you and your wife can travel the world when you're ideally, hit your 50s instead of your 60s, and so that you have a little bit of a nest egg to leave your children. Don't fucking change your investment strategy just because of the market. Like I said, you would have had to be invested that entire time to turn that $1 into over $90,000. Sitting for 124 years is hard enough, but it's time in the market. So not timing the market, and politics has nothing to do with that at all. So if we go ahead and take a look at investing based on a presidential party, from the same thing, if you started investing in 1950 instead, $1 invested in the S&P 500 in 1950, by 2024 would be $3,219. That also speaks to compounding interest. That's only about 50 years less, but it's, 30 times the amount of money. So again, the Bible of compound interest right there. So if you invested $1 in 1950, it would currently be $3,219. If you invested $1 though, and you sold when Republicans took office and only bought when Democrats were in office, you would have, any guesses? $108. And then if the shoe was on the other foot, if you sold when Democrats came into office and only held when Republicans were in office, any idea how much money you would have? Again, $1 invested in 1950. What would that be today if you did that? $30. So it's literally 100 times less than what you otherwise would earn. So guys, please just don't be stupid out there. It's drawdowns are going to happen under every presidency. Rises are going to happen under every presidency. It's the way that the market goes. The tenuous relationship between market returns and politics, the key bedrock of that relationship is randomness. That's really all it's going to be. Plus, my personal pet theory is that a lot of what presidents actually do, and what I was debating, my friend texted me earlier today asking me who I think the best president was, and then he asked me who I think the best president of this century was, and I said, I don't really think I want to make a determination, because as far as I can tell, there's only 2 presidents this century so far who we can accurately assess their impact on the United States and on the future of the United States that they had. We gotta give it some time for this shit. So, the same goes for markets and investing. Like, what the president is going to do is going to impact what happens in markets and the economy after their presidency as well. It's not like, everything that Joe Biden did stops today or stops on January 20th when the inauguration occurs. There's going to be huge drawdowns, there's huge gains under every presidency. It is as random as it gets. It's a completely stochastic process. If you look at there's absolutely no relationship whatsoever, and you can go ask Nate Silver for that stuff too. I didn't run the regression analyses on a million different ideas, but just go ahead and check out the Silver Bulletin. He published a piece on that recently. And the final chart that I want to leave you guys with today is from Mr. Michael Batnick over at 𝗏𝗏𝗚𝗏 Wealth Management, one of my all-time favorite charts. It's called There's Always a Reason to Sell. What it shows is the S&P 500, and there's, every once in a while, there's like a news story that was like the reason to sell of that week or of that month. And what did the S&P 500 do throughout that period? Ripped higher through the entire time. If you sold on any one of these, you would have missed out on further gains. We all know that idea that's like, if you miss like 2 days in the market, you're going to miss like 90% of the gains for that given period. Don't be that person. Take a deep breath. Don't do anything fucking stupid just because of who it seems like is going to be the president or who is going to be the president. Please, if you have a long-term investment plan, keep that in place. I can see, I can understand wanting to like reallocate your portfolio or something based on specific policies or something like that, like the CHIPS Act or the Jobs Act. If you want to gain exposure to a certain sector, absolutely, more than merrier. Please feel free to do that. But don't just do it because of the color of the tie of the person who is sitting in the Oval Office. I can't even tell you guys, I used to be an advisor, and we would get people calling in being like, I need to sell my entire portfolio. Fucking Joe Biden's destroying the economy. Oh my God, Trump's tariffs are going to destroy the economy. And it's like, our job as the advisors were to be like, please, please, please do not do that. That is so stupid. So please don't be that guy. The real takeaway here for the market is that the market's least favorite thing in the world is uncertainty. A huge piece of that uncertainty right now is who the fuck is going to be running the country for the next 4 years. Simply by knowing who that is going to be is a huge step towards clearing up that aspect of the uncertain macro picture right now. So hopefully that kind of helps out in the longer term. Guys, save politics for Thanksgiving dinner. Leave it out of your portfolio. Like we always say, our only investment advice, buy low and sell high, and best of luck with that. We got to leave you with a great quote of the day from Mr. Josh Brown himself. He's actually the CEO of 𝗏𝗏𝗚𝗏 Wealth Management. Put together a lot of these charts, and I actually grabbed all the charts that you see in tomorrow's edition from his LinkedIn post from earlier today. So shout out to you, Josh Brown. By the way, go listen to the Compound and Friends from last weekend with Jack Rains. Jack Rains is a writer for Sherwood News and Young Money. Great podcast there as well. I think it's right up the... If you're watching this video, you would love that stuff there too, so go ahead and check it out. But the quote that I want to leave you guys with from Mr. Josh Brown is, he said, stock investors care more about an election being over than they care about who actually won. We have learned this over and over again. And I think I can add and over and over and over and a couple more overs to that sentence, and I think Josh would agree with me there. That about does it for us here today. The election special over here at the Daily Peel. No more politics talk unless some big fucking policy gets passed or proposed or something like that. But guys, especially anybody who's if anybody's not an American and they're wondering what the vibe is, what's going on, shoot me an email, david@wallstreetoasis.com. Honestly, if you're an American, tell me who you voted for. Let me go ahead and see. Let me get a sense of who the Daily Peel apes are voting for in this election. Shoot me an email, please. I'm not going to say your name or anything like that, but I want to kind of aggregate like how many Trump and how many Harris vote. Maybe we'll kind of do this by the end of the week. We'll take some rolling submissions there. That'll be the first thing I say in tomorrow's edition, because I bet there's far less of you watching it at minute 33 than there was at minute 1. So with that, we'll go ahead and call it a day. Happy investing, happy trading, good luck America, and we will see you guys tomorrow. Bye now.